Welcome to another video in which I will be providing some more free analysis and education for all of you. If you're new to the channel, I'm a top author on the TRADINGVIEW platform, as well as running an educational company in which I teach all of my students how to swing trade with my strategies. Without further ado, let's get straight in the video and provide some free analysis and education and bring to the table some value for all of you. Okay, so first of all, I want to give an update on EURUSD. So for those that haven't followed the first analysis I published here on YouTube, first of all, from a monthly perspective, we are here on the monthly, and always remember guys, the monthly, weekly and daily time frame are for direction and the 4-hour is simply for entry. So you will always take from a swing trading perspective your direction from the monthly, weekly and daily. Now, if you see such a massive trend line, okay, with many touches, the market, when it breaks it, it will 90% of the times go and retest it. And as you can see, the market went for a perfect retest of it. So it broke below with this impulse here, then went for a perfect retest and now continuation to the downside. And it's pretty simple to realize basically what we were looking at from a monthly perspective. We obviously want to see continuation to the downside because we clearly have our impulse correction and we expect the next impulse. Now, if you want information on a retracement in general in the market, when we have an impulse and we want information on the strong zones of the retracement, we will take our Fibonacci from the high to the low. And you will find different zones, the 382, the 50%, 61.8 and 78.6. Now, the first strong area that the market can hit during the retracement is the 382 and possibly start a new wave to the downside. That is something that you will then determine on lower time frames. But in general, what we have here, if we take a Fibonacci from the high to the low, you can clearly see that the market stopped at the 382 Fibonacci from a monthly time frame, and you expect continuation to the downside from this area. Now, if we go down on the weekly time frame, what kind of price action we're getting on the weekly? Always remember that you need to stack as many confluence factors on your side as possible. So what will we get here from a weekly perspective? From the weekly, you can clearly see that the market made this push up, went down, found support, then broke that support to the downside. From the moment the market broke the support to the downside, basically that support is turned resistance. So after a market breaks a support area, that support will turn resistance. And that is the reason for which the market went to retest this area so many times and it always rejected with a wick, because previous support simply is turned resistance. Another concept, if you take your Fibonacci as we did on the monthly from the high to the low of the impulse to the downside, you will clearly see that the market has rejected the 78.6 and multiple times the 61.8 golden ratio. So basically the market was moving by steps and the push to the downside was very much expected, as we said in our last analysis, specifically also because the last weekly candle went up and then closed bearish, showing basically a clear rejection. Now, from a daily perspective, if you remember, basically when we did the last analysis on EURUSD, the market was clearly at this area here after this very massive rejection candle, also creating this W formation. So confirming again that we wanted to see the push to the downside, as well as if you take your Fibonacci from the high to the low, you can clearly see that the 78.6 was hit, the 61.8 was hit, the 50% was hit. So basically the market was moving by steps. And when you see a market that after an impulse and a correction, basically it starts moving by steps. So what you clearly see is that, for example, the market goes up, tests the 78.6, then tests the 61.8, then tests the 50%, then tests the 32. Overall, you will see the push to the downside. And you can see that here the market was tapping the steps one by one. So the market was here and we expected the push to the downside and the break of this counter trend line. Now, why a counter trend line? Counter trend line because it's a trend line that is against the overall trend, because we have already seen from the monthly and weekly that we want to see continuation to the downside. So this trend line was expected to break, and that is why we were looking for shorts, and we are currently in Euro shorts, not EURUSD. We are in Euro HKD shorts with the students, but anyway the two pairs are correlated. So simply Euro HKD given us basically one of our valid entries before EURUCAD. So we entered Euro HKD and not EURUCAD. But that is simply, we couldn't at that point, once you enter one euro short, you cannot enter the other euro short for a simple fact that they're correlated. So if one will go down, also the other one will go down. Now, if we go basically and see what we had from a COT perspective, so how are hedge funds positioned in the euro? So let's go and fetch the data for the euro. So what we can clearly see from the euro is that the net positions have been decreasing. Basically, sorry, the net positions have been decreasing. So basically what has happened is that we went from 51k net positions, we went to 69 and then 67k net positions, meaning that basically euro is getting sold by the banks. Now, I know that it's true is that with the last report we clearly had a -1k shorts and 304 added longs, but overall you can already see that basically it was clearly increasing. We went from 51 to 61, so 10k net positions added to the short side, meaning that overall banks and hedge funds are selling the euro, and that is why we expected the push to the downside. Plus, this shouldn't scare you. I'll now show you again why this shouldn't scare you. Even if with the last report we did get a little bit an increase, so basically they did buy a little bit the euro. Keep into consideration, guys, keep into consideration. Let's get back to our EURUCAD and just look at this date. Okay, the last report was 12/10. Okay, 12/10. Go and see it basically 12/10 here on the chart. What you will clearly see is that where is 12/10? Here we go. Basically, this is when the report came out. Okay, and after that, the market made the push to the upside and then a very strong push to the downside. So basically when the report went out, they then created this very big push to the downside. That is the day that basically we got this the massive rejection candle that you see here. Meaning that basically after the report, they always try to do this, okay? They always try to hide their actual positioning in a currency. They actually always try to hide it, but overall, as soon as after the report went out, they basically created this very strong candle to the downside. So what does it mean? It means that basically people had seen that they had actually added some longs. So they started longing the euro and they used the liquidity that the people had basically created by adding their longs to basically take their shorts. So we will see in the next report that will come out tomorrow, we will see that they will have actually added more shorts. It's pretty obvious. So that is what happened on EURUCAD. Let's go and see what we have for gold. Okay, so for gold, as you know, the market is still consolidating inside of this region. So the market is still in consolidation phase and we are still awaiting the next push to the downside. Now, what do we have from a weekly perspective? So what we can clearly see here from the weekly time frame is that the market overall has created a clear impulse to the downside, followed by a retracement. And after a retracement, you expect another push to the downside, specifically also because the market is currently retesting a very strong resistance area. We had very clear support here. All of that support is turned resistance at this level, and you expect the market to reject it to the downside. So overall, we want to see gold make another impulse to the downside. Now, why is our overall downside target at this level here? To realize why, we have to go on the monthly time frame. So here on the monthly time frame, what we can see is that the market has created this overextended W formation, and from here you expect a push to the downside. Now, if we take our Fibonacci from the low to the high of the impulse, what we can clearly see is that the 382 Fibonacci retracement has already been hit, and if you remember, we actually took the short to the 382 Fibonacci. And from this level, what we expect is now a push to the 50%, and then overall a push to the golden ratio, because this is the Fibonacci level that is aligning better with structure. That is what you're supposed to always target. The overall target will always be the Fibonacci level that is aligning better with structure. So at the moment, you're expecting the push to the downside, but if you go down on the daily time frame, you can clearly see that at the moment the market is clearly not ready for the short yet, And you can see that actually on the 4 hours, because always remember, monthly, weekly, and daily is for direction, and we have already taken the direction. We want to see the push to the downside. So it's all about monitoring price action on the 4 hour time frame, and that is what we are still doing with students. But we have to wait, guys. We have to wait for this area to break. This is clear support on the 4 hours. Support, 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 support. This area needs to break. Until this area doesn't break, we cannot be looking for shorts on gold. It's very important. The environment of the market is still bullish, and the structure, as we have just seen, is still bullish. Now, how do you determine the environment of the market? That I cannot share with you, but I can share with you simple market structure. Okay, this is simple market structure. If the market doesn't break this area, you cannot take short, because you're taking short from a support area. You need to wait for that area to become resistance, and then you can wait for a short on the retest of it that is aligning basically with what you have from higher time frames. Now, if we go and see what we have for basically the COT data on gold, so what are hedge funds doing with gold, let's go and check it out. And what you will see is that basically when it comes to gold, the change has been adding 2K shorts and closing 17K longs. So basically they closed a massive amount of longs and they're increasing their shorts. And if you look at basically their positions, they have 329K long positions on gold, which means that the reason for which basically up to now the market hasn't succeeded in making the push to the downside is because they have such massive amount of longs that they need to close before they can drop price. Okay, they will not succeed in dropping price if they have all these longs. So that is the reason for which after this impulse you're getting all of this correction, because they're basically closing out their longs. So it's very important to be monitoring price action on the 4 hour time frame for a potential short to the downside. And that is what we are doing at the moment. At the moment we are monitoring price action inside of this area with the students to wait for all of our rules to be satisfied before we can take this short to the downside. And this short will be a short with a very good risk to reward and probabilities when the market will satisfy all our rules for entry. If you enjoyed the video, make sure you smash the like button and you let me know in the comments below if you enjoyed the video. It really does support the creation of more free analysis and education for all of you, as well as go and check out the mentorship program, because it's a very complete program. It has everything you actually need to succeed in the market. First, you get all the rules of my strategies, and then you trade them live with me, as well as having me that I answer every question that you have within 24 hours in video format directly on your student dashboard, so that you don't miss out on any piece of information and you always understand everything. And I will see you all in the next video.